What's up everybody, welcome back to another video. Today I bring you a random video that I usually don't make. You guys usually get that Sunday stock watch list every Sunday, but today I bring you a video on Saturday just so we can talk about a few things that are going on in the market. The short squeezes, obviously you guys have heard of it. Everybody and their mother has heard of it. GameStop, AMC, Nokia, BlackBerry, you know, a whole bunch of names that are going on, Naked. And I just want to go ahead and talk to you what's going on so that you get an idea what we're looking for the remainder of the week, because I do make a Sunday stock watch list tomorrow. So make sure you hit that alert button, hit that like button, subscribe, and comment down below what other videos you would like to see on this channel. But make sure you hit that like button ASAP. The first thing we're going to talk about is last week I made a Sunday stock watch list. If you go ahead and look at it, I talk about how GameStop is about to explode, right? 7 days later, you can see I believe it was the 22nd, that was Friday, and look at the stock now. So from $67, it hit a high of $513, right? What exactly happened to GameStop and AMC and all these stocks? Well, Wall Street Bets had a group chat. I said a group chat. Well, Wall Street Bets is a group on Reddit, and you know, people came together and said, and basically came together and ganged up on a stock that had a high short interest, right? GameStop had a short interest of 144%, right? And AMC had a short interest of 86%. What does short interest mean, and what is that? What does that do to a stock? So, in a basic explanation for people that have never traded before, short interest is basically when someone bets against a stock. So, when you bet against a stock, you are shorting it, right? And you could short it. But what people don't understand is everybody knows that you can buy a stock in the stock market, right? That's buying 1 share, 2 shares, 3 shares, 1,000 shares, it doesn't matter, right? When you long a stock, you can only lose 100% of, whatever you put in, right? But that'll never really happen unless you're buying, a company that disappears. But let's just say you buy a stock at $5, right? And it goes to 10. You made 100%. But let's just say you buy a stock at 5 and it drops to $0, which is 99.9% will never happen. But you lose 100% of whatever you put in. But on the other hand, when you short a stock, instead of plus 1 share or plus 2 shares or plus 3 shares, now you are doing negative, right? So you have -1 share, -2 share, -3 share. You can have a -1,000 shares, whatever the case may be. When a stock goes from $5 to $4, you make money when the stock goes down because you're betting against the stock, right? Now, what happens when the stock goes from $5 to $10? You just lost all your money because you're shorting a stock. So it just doubled, meaning you just lost 100% of the money you put in because you bet against the stock. Now, what happens when a stock goes from $5 to $20? Okay, now this is where it gets interesting. When you buy stocks, which is perfectly, not perfectly, but when you buy stocks, it's safe. You could only lose whatever you put in because stock can never go negative, right? So when you buy stock at $5, it'll drop to $0, whatever. You lose whatever you put in. But you can't lose more than that when you're buying shares for long-term investments, whatever you're doing. But when you short a stock and a stock goes from $5 to $15, now you're like, whoa, down. Wouldn't you be down 200%? Yet now you owe money. Okay, so that's why shorting is so dangerous. So now think about it. GameStop is not, the short interest on GameStop was not 100%. It was 144%, right? So meaning for the available shares that were available to, the available shares on the market for GameStop, 144% of it was shorted, meaning that for every 10 shares, 14 shares were shorted for GameStop. So I keep getting distracted because I want to get into what exactly happened. Reddit, Wall Street, Bets, whatever you want to call it, they basically targeted GameStop because it was a very easy target for a squeeze, right? Now the stock went from basically a penny stock, you can see here, let's actually go in the last 20 days. Last 20 days, the lowest was 17. As you can see, the stock started heading higher. GameStop is a company that's going out of business or is in the process of going out of business, and they have high debt. Why? Because everything is digital now and you can download. But So people are like, yo, why would this stock double, triple, quadruple, 1,600% basically at this point from $17 if the stock's going out of business? It makes no sense, no correlation. Well, not everything is based off of fundamentals, right? There are things that go on behind the scenes, right? GameStop, is it worth $300 right now? Obviously not, we know that. And people are gonna say, yo, it has to come down, it has to come down. Well, it doesn't, right? So what you have to look at with GameStop is in the last, 11 days maybe, it's up 1,600%. And all they did was target a very high short interest stock. They ganged up on it and basically went after because they knew hedge funds had to cover. So how do you go from negative shares in your portfolio to positive? Well, you have, let's just say you have -5 shares of GameStop. The only way to go to 0 is if you have to buy those 5 shares back. So that's how you cover your short on the stock. So if you have -5 shares, which remember I said it's positive when you buy stocks and it's negative when you short it. So let's just say you have -5. The only way to get back to 0 where you have no position in GameStop is to buy back those 5 stocks that you're short on. So imagine all the hedge funds that are have negative shares because they're shorting, and they have to basically buy back those shares, increasing the price in GameStop and AMC and whatever, because this what I'm explaining goes to GameStop, AMC, Nokia, whatever, all the stocks that have been squeezing, right? The only way that they can get out of their GameStop is to buy back the shares that they're betting against, right? So not only is Reddit and Wall Street bets helping the stock prices go up, they're squeezing these hedge funds out, meaning these hedge funds have to buy back these shares to cover and get out their position. And not only that, GameStop still has over 100% in short interest. AMC still has over 86%, I believe I read yesterday. And all these companies still have hedge funds who need to cover. So the very next day, not the very next day, I think it was, okay, so this is Friday, Thursday, so it was Tuesday, I believe. Tuesday, 3 hedge funds reported that they filed for bankruptcy. One of them being I don't even know how to pronounce it. It's Citigal, or I don't even know how to pronounce it. I don't even want to go there. But 3 hedge funds filed for bankruptcy because now the stock that went from $17, and hedge funds don't play with obviously a couple $1,000s, they're playing with millions of dollars here. And when they're betting against GameStop, they thought this stock would go into the dirt. So when you have something that comes out of nowhere, like a Wall Street Bets group that had 2.2 million users at the time and now has over 6.6 million and is growing every single day because of the hype, this thing came out of nowhere and hedge funds knew nothing about it, right? So that created another push. And not only that, not only do shares, short interest on shares, the contracts there wasn't enough contracts on GameStop to be traded on this. So if you guys know anything about options, so when the stock was pushing, $60, $70, $80 in a day, the last contracts you could play were like $60. You couldn't even buy out the money contracts. So when Friday came about, which was the 22nd, yep, it was the 22nd, every contract closed in the money that day. The last contracts that were available that day were the $60 contracts, I believe. And every contract closed in the money, meaning so if you don't know this, if you trade options, which I do, contracts expire every Friday, right? What happens if you just leave it and don't sell it? What happens on a Friday when you leave it? It executes. What does it execute? What happens when a contract executes? Excuse me. It turns into shares. So everybody let their contracts, well, not everybody, but majority of people who had contracts on GameStop let their contracts expire on a Friday, and then there are millions of shares that need to be fulfilled. And basically, these contracts execute into shares, meaning they bought the shares, and the stock ended up going from $64 all the way up to $160 that Monday morning. So over the weekend, the stock went from 60 to 160, and then came down and then came back up until we're at $513. So as you can see, this is getting very serious, and everybody is, looking for regulation, and, hedge funds are complaining about all the things that are going on in the market and how this is manipulation, whatever the good stuff. But the fight back is, hedge funds have been manipulating the markets for, years, having high, algo trading, high frequency trading, the whole 2008 crisis, all that good stuff is being brought up. It's like, yo, and a lot of, faces are turning out. Dave Portnoy, and a lot of people are coming on these channels and saying, yo, let these traders trade, do whatever they want. They're not doing anything wrong. They like a stock, they buy it. Simple. And just a whole bunch of nonsense has been going on this week, which was great. Obviously, as a trader, as a day trader, you want that volatility. We had a lot of fun, and GameStop paid a lot. If you follow my trading page, you would see how much fun we had on GameStop. But enough of that. Let's talk about where GameStop is going. I told you last Friday, this is going to explode. If you go to my last Sunday stock watch list now, we're going to talk about where GameStop and AMC, these are my two favorite out of the group for the remainder of the week, or whatever the weeks, whenever they come around. Nokia is cool. I know a lot of people are playing with Nokia, BlackBerry, all that good stuff. But for GameStop, let's talk about it. So GameStop, as you can see, GameStop hit a high of 513, but we closed at a high of 325. Now, where do we go from here? Is there enough firing power or enough people to take this back up to 513 and let's just take off? Sorry, my PC keeps turning off. Is there enough firing power? Is there enough short interest? There's enough of everything for basically GameStop to head to 1,000. Is it going to hit 1,000? It's very unrealistic for it to happen, but at the same time, it's not, right? At this point, it's not. We still have high short interest. Hedge funds need to cover, or they're just risking everything just to make a point. So hedge funds should be getting out there. When they get out their positions, they're going to have to cover. Now, forget about what they need to do and how much short interest there is, because we still know there's over 100% in short interest for GameStop. Stock's at 325. We have a little wedge going on here on the 1 hour. As you can see, we retested the top multiple times. I can actually higher this a little bit if I wanted to. So like if I wanted to remove this, I drew this real quick for the video, but if I wanted to, I could just do this. Extend to the right, nice. All right, and now you still get a wedge here. So now we're getting towards the end of this wedge. It's gonna get tighter as we get to Monday, and as we get tighter, we can break out from both sides here. Where are we going to break out? Well, at this point, it all really depends on Monday. So if we get a big move Monday and we close above like 400, 450, or if we even crack this new high, this is gone. They're gonna take this and move with it. This actually, if you take a look at it on a bigger chart on the time frame, if this breaks this new high and closes above the wedge, anytime this week, this target on GameStop is $750. The target on GameStop is $750 if we end up breaking this wedge and making a new high. But does everything happen smoothly? No. We can break down to the downside if we end up closing under this wedge. We'll go back to normal. Maybe it won't come, I don't think personally it's going to come down straight down to $17, but it's probably going to come down to, 100, chill there for a little bit, consolidate until it ends up, coming back down to 17. But for the upside, this wedge, I would be paying attention to this as far as playing it to the downside or the upside. I know a lot of people like to swing this. I currently don't have a position on GameStop or AMC, but I would pay attention to this as far as day trading. You definitely want to see this take the high right here at 513, and you want to watch this wedge right here, because if we break to the upside, we're going to take off. We also want to see the wedge close above. So this, see how this is breaking the wedge, or it broke the wedge? The candle never closed above that wedge, right? So then we come back down, we retest the bottom here, we kind of retest here, and we're just consolidating for Monday. So Monday, Tuesday, as this gets very tight, I'm going to look for a breakout to either side, and that's how I'm going to play it. GameStop. We talked about GameStop. Now let's go to AMC. AMC has a little wedge going on. It's not as good looking as the GameStop one, but as you can see, it's the same concept. We retested the top here, retested the top here, retested the top here, and we've retested the bottom here, 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 and we're currently consolidating in the middle here. Monday, Tuesday, this is very tight. This has to break out Monday to either side here. So I would have, pay close attention to where we are right now. And this could be the beginning of a GameStop move, where if we take out this 25 and, short interest is high enough, which it is, it's at 86%, we can head to, 50, 60, 70, and up to $100. I wouldn't even say up to, because you can take this a lot further. But with the group growing in Wall Street Bets and Reddit, and this high interest at 86% on AMC, this is going to be another GameStop. They're talking about AMC being the beginning of the whole GameStop move. As you can see though, in the last 20 days, the low is $1.91. The low on GameStop was $17.05, around there. And then we ended up pushing, and as you can see, we hit a high of $25.80. And then now we're here at $13, which is about half that price. And this wedge is going to break Monday. So I would pay attention to where this wedge breaks and where it closes at, and you'll understand where AMC. So draw this on your chart. I would draw this on your chart. If this breaks above and closes above, then we're gonna head here and we're gonna need to take this high out. Once we take this high out, we're gonna see numbers like 50, 60 come about very quick. And if we close below $10 or 9 on Monday, we're gonna struggle very hard to get that momentum back on AMC. So it's all about momentum and keeping the momentum so that these stocks can make new highs and continue to move forward. For me, it doesn't matter what it does because I don't have an open position. I like day trading, so I'm in and out during the day. So I wanted to let you guys know what I see on AMC, what I see on GameStop. As you can see, last week I called it out for you guys on the Sunday stock watch list. You'll have another Sunday stock watch list tomorrow, so make sure you guys turn on your post notifications so we can talk about it more. I'll see you guys. Peace.